Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Ned Naylor-Leyland of Cheviot Asset Management. Ned's back in the house with a major story. LBMA smoke signals smell fishy. Ned, tell us about it. First, what is the LBMA?
Morning, Max. Well, the LBMA is the London Bullion Market Association, which...
How does it differ from the COMEX?
Well, the COMEX is the futures market, whereas the London market is the over-the-counter spot market, which is much bigger. And that's probably where the greater part of price discovery takes place. And it's very opaque, relatively little information is available. Certainly more information is available on COMEX as to what goes on there.
What about size-wise? Compare the two size-wise.
Well, I think... probably 10 times bigger, the London market. But it's called Loco London. It's not really about London per se. That's just where the big bullion banks come together and create this affiliation. I think it took place originally in the 1980s.
Now, goldmoney.com this weekend wrote, at the moment, every dollar move upwards in the price of silver costs the shorts nearly $500 million. There's no way it can be covered because the cash silver simply does not exist. So, is this why the LBMA is getting the fishy signal? First of all, talk a little bit about what that means to be exposed on the short side with a up move in silver price, and then how that relates to LBMA.
Well, this story is about the fact that for some time there have been signs that the London market is struggling to deliver silver versus delivery requests. Because, of course, although there's a huge volume of business done, not necessarily that much of it is actually asked for delivery. But what appears to be happening is the deliverability of the LBMA market is coming into question. I wonder whether perhaps what happened recently may have had something specifically to do with Sprott and his silver fund. He's been acquiring large amounts of physical. And I think that probably played into what took place. But just to clarify what my article is about, it's about the fact that at the beginning of November, the LBMA, without any sort of fanfare beforehand, pulled their production of the silver forward rate, which is called SIFO. They still produced GOFO, which is the gold forward rate. And it was just interesting that took place as there was a wash low in silver, and perhaps, I mean, I'm speculating a little bit here, but I think maybe Eric was in the market buying at that point. And then further to that, Sandeep Jaitley, his basis service, which is very interesting because it provides both sides of the market as opposed to just a mid price, which is what's offered by SIFO and GOFO, suggested that there was actually a lot going on at that time, and that there were real pressures, and the market went into this fairly severe backwardation at the exact same moment that particular measure, SIFO, was removed by the LBMA members. And that seems to be a little bit too much of a coincidence, certainly for my liking.
You know, when I did a BBC 2 years ago on their World Service, I did an interview with Rob Young, and I explicitly told him what was going on in the silver market, and then they explicitly did not air that interview because the BBC World Service and the mainstream media is protective of this racket, of the manipulation racket that goes on at the LBMA and other. LIBOR went on for years. It was an open secret. There was nobody. It was an open secret that LIBOR was being manipulated for years. It's an open secret that LBMA manipulates these markets and indexes to hide the identity of manipulators who are trying to squeeze out profits by manipulating these markets. It's an open secret, but the mainstream media won't go there. Why is that?
Well, I think it's an interesting question specifically about the BBC. I wonder whether the BBC did an investigation into LIBOR and then pulled that too. I mean, I know you had that experience. I have too. I was also approached by Panorama to talk about the silver manipulation story a couple of years ago. Went into some detail, as did Andrew Maguire, the whistleblower. They spent a whole load of money, did lots of research, and then it would appear that the story got too hot for them. I mean, I don't know whether...
So let me get this straight. You were doing an interview for Panorama, which is a big magazine-style tabloid show for BBC.
Well, it's an investigative journalism show.
And yet this has never been aired.
Well, I mean, they appeared to. I suppose their argument would be they don't think the evidence was there, despite the fact that people who spoke to me said that they think it's pretty obvious it is happening. So it brings into question, Max, whether or not these investigative journalists are actually there to either confirm that there's nothing going on, or to have a look and then try and sort of disrupt the angles that you and I might be interested in. I mean, it seems so obvious that time and again, when subjects which subsequently come out they've been investigated, but those shows never go to air, and it's all a bit fishy.
I think what happens, you know, in the case of BBC World Service or a Panorama show, what happens is they start an investigation, then they go through a period of fact checking. So they have a underling fact checker who then is not very experienced, but is confronted with a concept like a futures contract. And then because they can't for the life of them wrap their mind around what a futures contract is, it goes back up to the editor saying, we just can't make sense of a futures contract. So they go, well, you know what, I guess we can't air that piece, even though it clearly indicates how the UK economy is being stripped of wealth and why the austerity is bogus and why the fat cats are taking the cream off the top in a manipulative environment sponsored by the 0% interest rates and the criminal racket of Cameron, Osborne, and the rest of the city. They don't want to expose it. They can't understand it. They're worthless as journalists, and your experience is mirroring my experience. And let's talk about this other canard out there, inflation versus deflation versus hyperinflation. It's not really inflation versus deflation because that would assume a functioning system, doesn't it? It's something, we're talking about systemic collapse. So if the Titanic is sinking, you don't talk about whether we should go, you know, this way or that way. You have to face the fact that you're sinking. So inflation, deflation, we're beyond that. There's something else going on, Ned.
Yes, I completely agree with you. I think it always amuses me to see this battle going on when meanwhile the purchasing power of money is collapsing. Of course, that's what matters. What matters isn't whether or not we want to call it inflation or deflation. The reality is that the pound and the dollar are worth, let's pick a number and say 2-3 cents of their original purchasing power. They've gone from a full dollar or a full pound to 3 cents or 3p. Are we then saying that they're going to bounce and go back to 5 or 10? Or are they going to go to 0? Well, you know, you could make the argument that it looks most like stagflation in terms of, you know, stagnant growth and inflation in terms of people's real goods and services. But of course, the last time we lived through that, the purchasing power of money was much more solid, and we were at, I don't know, 50p back then. Whereas for me, what's happening now is all about the final denouement of paper currencies and what will happen on the back of that.
Right. Pari passu with the idea of inflation, usually you have wage inflation. But for 30 years, wages have been kept stagnant. And in fact, there's been an all-out assault on labor in this country and around the world. And so a part of now they're saying in the Financial Times that because the bailouts cannot possibly be overcome with growth in the economy, that they're going to have to go back in the UK and slash wages by 30 to 40% to make that all work out. So the austerity that people are complaining about today really hasn't even started yet, Ned.
Well, I suppose that's true. I mean, of course, there are lots of different ways this can roll out. The other one is a big debasement of sterling in this country would be, you know, another way in which we can see this roll out. And sure, I think you'll end up getting a bit of everything. It will just, the status quo, where we are at the moment, seems difficult for me to be stopped. We're just going to continue to debase until it gets to an ultimate tipping point, which is where this issue of hyperinflation comes in and people start to panic. But of course, hyperinflation is only relevant at the point at which people lose total confidence and faith in the government. Right.
Hyperinflation, it should be noted, is not more inflation so much as currency collapse.
That's right.
Which is a little bit different than just having a lot of inflation.
I think it's very difficult to predict the exact moment that might take place.
Okay, let's talk about the prediction, because clearly you mentioned the sterling as being now in the crosshairs of being devalued in some way or losing purchasing power. Of course, it's all reflected in the UK gilt market, the UK bond market, which is trading at a 300-year high. The UK bond market, like the US Treasury bond market, also trading at 240-year high. You also trade bonds. What are you telling clients about the bond market? If, in fact, what we're saying is correct, aren't bonds in a bubble?
Yes, I think they are in a bubble. I think it depends on what kind of bonds we're talking about. I think we've discussed before there are some government bonds that are better than others, and I wouldn't necessarily put gilts in the better than others pot. I think that what's interesting is that the foreign exchange market has taken sterling's ability to print and sterling's the fact that it's our own sovereign currency as being a benefit. I mean, one might imagine that printing enormous amounts of money or doing quantitative easing on a huge scale, I think we own 40% of the gilt market through the Bank of England at the moment. Some might consider that to be a bearish sign for sterling, but actually over the last 2 years, sterling's held up very well in the foreign exchange market. So I think...
Right, but in a leper colony of paper currency, sterling might have more fingers than, let's say, some other currencies.
Well, this would be the view I would take too. I think it's ultimately a lot about ratings agencies. If sterling does get downgraded, and that's the word on the street is that may be coming soon, then I think foreign exchange traders will look at it a bit differently.
But hyperinflation burst is going to crash the bond market.
Well, it clearly would do as and when that happens.
It would do, yeah. But you're saying the timing is hard to predict. Clearly, people have been calling for this for several years now.
Yeah.
And those people have been wrong. Bonds have been relatively good performers, not outperformed precious metals, but.
Well, I wouldn't say they've been wrong, Max. I think it depends on how they've been positioned while that's been taking place. I think, yes, if you've been short gilts for the last 2 years, you've done very badly. But I think it's more about how do you want to position yourselves to be defensive and be in the right place for what's going on in real terms. When we see a big re-rating for gold and silver higher, and that will come at some point, then those people who've done that will look cleverer than they do now. But
okay,
let's be honest, it's still going very well for those people that have put themselves into a cash proxy such as precious metals.
Well, look, folks out there, particularly in the U.S., they'll say, well, the U.S. is a reserve currency. They've got the central bank. They'll never default on bonds because they can just print money and buy more bonds. And you hear this all the time. Folks like Paul Krugman, for example, will tell you this all the time. Now, isn't it true, however, that in this global financialized world where wages and labor have been taken out of the equation and it's just bankers versus hedge funds versus money markets versus sovereign wealth funds, that if the taste for precious metals gets to a certain critical mass and people begin to start dumping bonds to buy precious metals, it doesn't matter how many dollars and pounds these central governments are going to print or yen, the precious metals are going to skyrocket and bonds are going to get hammered.
Of course, there's a natural tipping point somewhere in there. Exactly where we are, we don't know. But what's interesting is Bill Gross, you know, the head of PIMCO, the world's biggest bond fund manager, has brought up gold several times in the last 12 months as being something one ought to own. So I think we're gently moving.
But that tipping point is being delayed due to the two things: market manipulation at LBMA and the failure by mainstream media, particularly BBC, to report on the facts.
I think that the failure to report on the facts is probably the most important thing of all, because people are very mediated and they rely on information to be given to them. So I think that pushing back against that, which is a job that you do, is
because of this show last month, demand for gold around the world hits new highs. That's Keiser report in action. Around the world, people are buying gold and silver to take action against the banking terrorists. Not you, Ned. We like you. We'll kill you last.
No comment.
All right. Well, Ned Naylor-Leyland, that's all the time we have. Thanks for being on the Keiser Report.
My pleasure, Max.
That's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, Ned Naylor-Leyland of Cheviot Asset Management. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, Max Keiser saying bye, y'all.